Folks, today I'm going to talk about three, not one, not two, but three stocks that are seeing some major consumer demand. So while majority of the world is still facing lockdown mode, there's consumer stocks to consider accumulating, especially ones that are in the business of providing basic necessities, things people need instead of want. While canned meats and cleaning products are nowhere near as sexy as the latest iPhone or the hottest new computer from Amazon, these stocks are in much needed demand right now. And for the foreseeable future, that's going to be the case. In other words, there's always a bull market if you know where to look. And right now, the stocks that are seeing strong accumulation are focused on consumer staples. Now, today, I want to focus on three stocks that are seeing strong consumer demand. And I believe with the uncertainty surrounding COVID-19, there's a really good chance we're going to see strong institutional accumulation and positive earnings surprises in these three stocks over the next few quarters and possibly beyond. As I go through these stocks, keep something in mind. These companies aren't usually headline grabbers, but right now, these are some of the savviest low-risk trade opportunities that the market offers. And you're looking at companies that are extremely in demand for the foreseeable future. The first stock on my list is Clorox. Ticker symbol is CLX. Clorox manufactures and markets consumer and professional products worldwide. It operates through four segments: cleaning, household, lifestyle. Believe it or not, but the company was part of the Procter & Gamble brand for a while. But the company decided to go independent right before the 1970s. While making bleach is not very exciting, it's super stable considering it's a cleaning product considering cleaning products are flying off the shelf right now. And I believe this will continue till there's a vaccine against COVID-19, which may or may not come our way till next year. While Clorox is continuing to see strong upside growth, the stock is up over 30% this year alone, and price continues to trade near all-time highs, even in the current market climate, when the S&P 500 is trading below the 200-day line and is exhibiting bearish bias. Earnings through June are expected to be up 9% from last year, and shares have shown positive earnings surprises over the past 4 quarters, which is huge. Price action is dominating right now, and investors can't get enough of Clorox at this time. That actually sounds funny. While I'm not seeing a major pullback in the near term, the stock looks to be a great buy at the current levels and should continue to surprise investors and traders in the next 2 quarters and possibly longer if COVID-19 persists without a viable vaccine. The next consumer stock on my list is Campbell's Soup, ticker symbol CPB. The company makes a range of soups and simple meals, beverages, snacks, and packaged fresh foods. While the company has been out of favor a few years ago, and it looked like Campbell's Soups might be history, its famous soups weren't selling, and the company was having trouble finding its footing in the grocery aisles. Younger generations just weren't interested in canned soups, and Campbell was bleeding cash. But the company started to make a bigger push into quality aspects of its brand and refine its product lines. And it's been working. Campbell's stock is back on growth track and has regained almost all of the loss. In the past 12 months alone, Campbell's is up 30%, with grocery sales up significantly. That will help improve its earnings even more. It also has a reliable 2.8% dividend. Moreover, last 4 quarters, the company has had positive earnings surprises. On a relative strength basis, it appears that investors are jumping into Campbell as a defensive play in light of COVID-19. Canned goods can last a long time and are some of the best-selling products during economic and social corrections. With no sign of vaccine for COVID-19 and with the world being turned upside down, the odds are pretty strong that demand for canned goods will continue to grow. And if that's the case, there's hardly a better company in the market segment than Campbell's Soup, ticker symbol CPB. Now, the last company on our short consumer stock list in demand is Hormel, ticker symbol HRL. Hormel Foods Corporation is a global branded canned foods company doing business across 75 countries worldwide, over 30 brands. The stock is still shipping canned meats while meat companies are closing down. Price of the stock is near all-time highs and shares are up, 18% for the year. Over the last 5 years, Hormel Foods has increased its dividend 5 times on a year-over-year basis for an annual average increase of 13.53%. Most importantly, the relative strength performance, which is the measure of how the stock is trading in comparison to other stocks, is off the roof. Hormel trading near all-time highs as I'm making this video right now. In comparison to the great majority of consumer-driven stocks that are trading below the 200-day moving line, along with 80% of the S&P 500, which is bearish, in my opinion, till we see a vaccine that destroys COVID-19, there's going to be a heightened level of fear around basic necessities. Even now, 2 months after COVID-19, there's still hardly any toilet paper at the local store, and it seems like the world may be on a lockdown for a while longer than we originally anticipated. This is going to cause increased demand for a handful of consumer stocks, and in my opinion, the top 3 stocks in my short list are Campbell, Clorox, and Hormel, at least till the economy wakes up and the world becomes safe once again. Folks, I spend the majority of my time talking about how to reduce risk, and during these volatile times, I think you understand exactly why. A good way to decrease risk is to simply minimize the time you spend in the markets. In other words, get into a trade before a large move and get quickly out. As a matter of fact, Lance Ippolito made a career out of these 24-hour trades. You see, he deciphers data from the options market and uses it to strike moments before a stock jumps or crashes. If you're tired of the market roller coaster and hate watching your positions plummet, click the link below and watch Lance explain and prove his strategy. Do it now. Don't delay. This is big, good information.